Welcome back to another video on my channel. Now, a question which had been recently asked to me was, does a company get impacted when its share price falls or when it rises substantially in a period of time? Now, this may be a question which may flummox a lot of people, and hence this video will tend to address this in a very short fashion. So the answer is, if there are daily fluctuations in stock price, I don't think there is any direct impact on the company as such. However, in an indirect fashion, a company's ability to raise capital in terms of a rights issue or maybe a QIP or by pledging their shares to raise capital for their running of the business could definitely be impacted if the share price falls by a huge amount. Now, you may have recently heard of the Hindenburg Adani fiasco, which is on right now. And one such situation has played out there. Adani Enterprises shares have fallen substantially, and what this led to was the need to pledge additional shares because the value of the shares that they had pledged was at a higher level. And when the price fell, they were required to furnish additional shares just to meet or just to ensure that their loan was still serviceable. This is the indirect way that a company's daily functioning could be impacted by the share price movement, but essentially there is no direct way that a 2-3% fall or 2-3% rise or on a daily basis could be impacting the company's working as such. Now, thank you for watching this video, and we'll be back with another video on a similarly interesting topic.